Hey, I'm Melanie Bajrovic. Let's talk about setting your real estate investing goals. First, the fact that you're watching this video right now indicates you already believe real estate would be a tremendous addition to your financial portfolio. You know you can build real wealth for yourself and your family and provide the freedom and financial security that you've always dreamed about. So the question isn't should you invest in real estate, but rather the question is, why do you want to invest in real estate? What results do you want or need from your investments? The clearer you are about your goals, the easier it would be for me to help you achieve them or for you to figure out how to do it. It doesn't matter how aggressive or how conservative your goals are, but what's crucial is that you have a clear goal of what your real estate investments need to produce for you. Then we need to establish how will we know when we get there? What's our end goal for our investments? My personal strategy focuses on two primary financial drivers that determines my investment property criteria. That's cash flow and my net worth. And depending on where you are in your financial journey, your criteria might be very different. So firstly, let's identify what type of investor you are. So let's put that into three categories to help you get a sense of what your plan might look like. First, there's the investor that likes to buy one or two rental properties as a way of diversifying your financial portfolio and supplementing your retirement pension, as well as enjoying the benefits of appreciation over time, adding to your net worth, and ultimately passing it on to future generations. This group's going to view real estate investing as important, but a complementary part of an overall financial and retirement strategy. The second group then is made up of those individuals who use real estate investment as their primary vehicle for wealth creation and a major component of their retirement plans. This group wants to increase their net worth, move towards financial independence, and create wealth that can be passed on to future generations. They're not full-time real estate investors, but they focus on creating sufficient cash flow from their investments over the years to potentially replace one of their incomes. And thirdly, this group comprises of individuals who not only see real estate as their primary vehicle for wealth creation, but also as their full-time job. They want to build their real estate portfolio to the point where they'll be able to quit their current employment and devote all their energies full-time towards developing a large real estate portfolio. These individuals view investing as real estate not only as a way to create financial independence, but also to build a large portfolio with a significant number of properties that include both the potential for increasing their net worth and developing a significant monthly cash flow. It doesn't necessarily matter which group you belong to right now. The process is the same whether you're buying 1 or 100 properties. But the goal for me to be able to help you is to have you clarify. And hopefully the above examples would just help you get clear on what you're after, why you're buying real estate, and determine what results you're going to need to achieve from your real estate investments, and allow you to put together an actual plan of action so you can achieve those results. So let's talk about cash flow as one objective when investing in real estate. Cash flow is the money you get from your real estate investment when the rental income you receive is more than all the costs you incur. Those costs are things like your maintenance, property taxes, mortgage payments, insurance, and allowing some for vacancy. And when you buy a property right, finance it correctly, and control your expenses, you're going to achieve a positive net cash flow right from the start. And as rents increase over time, your cash flow is also going to continuously grow. Cash flow is king, regardless of your personal criteria. Even if your property cash flows $1 a month from the get-go, you can rest assured that you've made a good investment decision. But of course, $1 is obviously not our end goal. But if this is your primary objective with your investment properties, some strategies for increasing cash flow fast include: 1, you could put more cash down for a down payment. 2, you can amortize your mortgage for 30 years, so you're going to have lower payments as opposed to accelerating either your payment amounts, payment frequency, or having a shorter amortization period, which is something that you would have done if your primary goal was to own your property free and clear. Okay, you can look at duplexes and small multifamily properties. That gives you multiple income streams that's going to add up faster to increase your monthly cash flow. And finally, you can buy properties that are steeply discounted. Now, alternatively, if your goal is to increase your net worth mainly and increase your financial security over the long haul, There's a slightly different set of strategies we can follow, which I'll share with you in a moment. But first, let me define what net worth is and how you're going to calculate it. Your net worth is the sum total of all your assets minus your liabilities. Assets are things like real estate, cash, RRSPs, gold, things like that. And liabilities are things like your student loans or car loans or outstanding mortgage or line of credit. Now, I bought my first property when I was 22 years old, and because I had time on my side, I pursued the long-term vision of buy, fix, and hold strategy, thinking about both cash flow and building net worth. And although I was focused mainly on building wealth as my primary goal, I also kept cash flow top of mind to guarantee that each property was a win. And I did that by buying at the right price below market value so that I always made money going in right off the top. And I financed that first property for 25 years to keep my mortgage payments low, but then I also accelerated the payments to biweekly and I paid down more principal as opposed to paying mainly interest. And then I also earned sweat equity and I forced appreciation by doing many home improvements myself and with the help of family along with contractors. Of course, I had to hire contractors for various bigger jobs, but I did as much as I could by myself in the beginning. This not only allowed me to command higher rents, but to also increase the value of my property, which again built me more equity and increased my net worth over time. Now, when it comes to increasing your net worth, time is one of the best tools to have on your side, but it's not the only thing you can do to increase your overall wealth quickly using my system. I'll show you briefly the top 4 ways you can do this. First, you can be sure to purchase on shorter amortization notes. Example, like a 15-year mortgage versus a 30-year. Secondly, be willing and able to make improvements to your property to add value, or buy fixer-uppers with the intent to add a ton of value quickly. Thirdly, you can invest in single-family homes, which generally have higher appreciation rates than multifamily properties do. And lastly, you can accelerate your debt paydown regardless of the length of your mortgage. So that's things like switching to weekly or bi-weekly payments. Generating wealth through real estate isn't about simply buying one property and sitting back and relaxing. Creating wealth through real estate requires